Coming up on Market to Market, keeping the packing house door open, trying to pass it on as markets evaporate, spinning up a grocery store in the middle of a pandemic,
As far as spring wheat is concerned,
and market analysis with Ted Seifried next.
you lose a fair amount.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, May 8 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Late this week, Secretary Perdue told consumers he believes meat processors will be up and running at full speed in the next 7 to 10 days as pathways for protein and other food items are sorted out. Many animal producers are still angry about the backup at the packing plant door and the appearance that processors are receiving higher profits. Colleen Bradford-Krantz reports.
Recently, all of you about our food supply chain.
This week, U.S. Secretary of Agriculture Sonny Perdue declared that any packing plant that has yet to comply with federal safety guidelines related to COVID-19 must quickly come up with a written plan as to how and when they will do so. He also clarified that state and local officials are not to interfere with the reopening of plants that have implemented the required safety measures. Perdue's announcement comes on the heels of the executive order signed last week by President Trump that delegated additional emergency powers to the secretary under the Defense Production Act. The National Cattlemen's Beef Association applauded the move.
So we were incredibly grateful for the president stepping in and putting out an executive order on this. This is the most important issue out there for our cattle producers right now, to get those cattle moved through the system. I think we've seen a lot of state and local governments with the best of intentions, but perhaps not the most accurate information or the most current information, dealing with this in different ways.
Lane said the OSHA and CDC checklist of safety measures for packing plants, a critical industry struggling with workers at some locations becoming infected with the virus, should mean decisions are based on science rather than emotion.
If they're walking the walk and meeting those obligations, let's make sure we're keeping the road clear for them to keep meeting that critical national need of getting beef to store shelves.
As customers grow nervous about a potential meat shortage, some grocery suppliers such as Costco, Hy-Vee, Kroger, and others were, as of midweek, limiting how many packages of meat customers could buy in at least some stores.
We continue to remind people there's no shortage of beef. There will be beef available in the grocery store for everybody, as long as people are buying an appropriate amount when they go to the grocery store.
Lane says cattle producers were already facing a tough situation before COVID-19, with the small number of beef packers making competitive pricing a challenge. Now, hog, cattle, and poultry producers are also dealing with slowdowns or shutdowns at some processing plants. This week, attorneys general from 11 states joined cattle industry groups and some members of Congress in asking for an investigation into possible price collusion among the 4 major meatpacking companies.
What they're getting paid for their cattle right now is as bad as anybody has seen it in as long as anyone can remember. And that's a tremendous burden for our producers in the country right now, especially as they're seeing this conversation about supply issues in the grocery store and beef flying off the shelves. It really pours salt in the wound for them because they're struggling to cover expenses and taking a loss on their cattle.
President Trump also directed the Department of Justice to start an investigation of its own. For Market to Market, I'm Colleen Bradford-Krantz.
COVID-19 brought 11 years of economic growth to a screeching halt, but there may be some bright moments ahead. Last month, unemployment hit a record high 14.7% as 20.5 million jobs evaporated. Officials with the Labor Department say the number should be closer to 20% due to misclassification of workers. In February, the unemployment rate was a record low 3.5%. Wall Street rebounded on the news, believing this might be the bottom for unemployment. Even with jobs gone and supply lines disrupted, American ingenuity is helping divert some of the time-sensitive goods to new destinations. As restaurants try to stay afloat with curbside pickup options, most of the food heading home is a main meal, leaving appetizers on the shelf. This puts Idaho onion and potato producer Jerem Jemmett in a pickle. He started planting this season's crop on his 350 acres in early February. By the time planting was done, COVID-19 had cut off access to restaurants, his largest customer.
Once you're planted, it's, you're kind of sunk to that point. And so then you have to start really figuring out what makes the best business sense. Do we continue to raise the crop? Do we abandon the crop? And so that's created some headaches and a lot of sleepless nights at times.
Some producers may have to disc under a ripe crop in a few months if those markets fail to reopen. Jemmett contributes to Idaho's more than 13 billion pounds of spuds produced annually. Most potatoes end up in storage after harvest, if not bagged immediately for sale. But when the food service sector began canceling orders in March, piles like these were made as sales to arenas and entertainment venues evaporated.
That represented about 60% of our potato business. So all of a sudden, those potatoes got to find a home somewhere. And we've done everything we can, the Idaho Potato Commission, to redirect those into retail through various creative programs.
When images of raw milk being dumped down the drain and green beans being plowed under were showing up on social media, those in the food insecurity community noticed. Feeding Tampa Bay covers a 10-county area where more than 4 million Floridians live. Calls for assistance went from 600,000 to more than 900,000 as workers were furloughed or laid off in the wake of the pandemic. With an excess of produce in the pipeline and needs at food banks surging, local food pantries organized a way to change the direction of the supply chain.
Organizations like ours, my peer group in the state of Florida, the other food banks, we tried to step into that as much as we can. Sometimes that's a financial issue. Can we raise the money necessary to do that? Sometimes it's just a logistics issue. Nobody wants to see food go into the ground. No one, not a farmer, certainly not us as a food relief organization, and certainly not a family sitting at home who could have used it.
Regional supermarket Publix bought 1 million pounds of locally grown produce for food banks. So did local producers, who likely have already lost $500 million in revenue. The Florida Department of Agriculture threw its resources behind the problem and created another venue for the oversupply.
So what we were able to do is create our online commodities marketplace. We created a new website, a web page on our website that allowed our agriculture industry to upload all the commodities that they may have available. And then all of our local, whether it's consumers or other food banks, can go right onto the website, see where that local produce is, see where their farmers markets are, their U-picks, and it really has been an opportunity to connect the consumer directly to our ag producers. It's been a tremendous success, but unfortunately that $500 million worth of losses is already going to be lost. And so now it's really an opportunity for us.
Going to the grocery store can be an ordeal, especially if it's an hour away. The balance between having enough people in town and making a profit has spelled the end to more than one local establishment, but at least one town has found a way to put its buying power behind solving the tough equation. Peter Tubbs has more.
In Gowrie, Iowa, the old grocery store is now the new grocery store. During a month-long transition, the town had no grocery store at all, but the nearly 1,000 residents saw it coming.
So at that point, there was a group of us that kind of got together and said, oh, we see the writing on the wall.
In January, the former owner was closing several of his grocery stores, like this one in nearby Rockwell City, that served small towns in central Iowa. Gowrie was on the list. Community members asked if they could help.
Reached out to him and said, would you be willing to sell it if we could raise funds?
In 10 days, the citizens of Gowrie raised over $250,000 to buy the building and everything inside.
That's when we kind of got together and said, how is this going to work? What does this look like? Is it a private company, LLC? Is it a cooperative? Is it a community nonprofit?
Now named the Market on Market, the grocery has over 100 owners who purchased a share of the store for $2,500. Each share in the grocery is a bet on the long-term viability of Gowrie. But opening in the middle of the COVID-19 pandemic, the market has seen the same customer shopping habits that are stressing the supply chain. The change is challenging the new manager. Larry Roper spent the last 20 years as a produce manager for the grocery stores and box stores that are now his competition.
A lot of it's high demand items, like, everybody knows the toilet paper thing, the paper towel, the napkin, those sort of things. The cleaning, sanitizing chemicals that are used to keep your hands sanitized, all that sort of stuff is very, very slim and rare for the customer to be able to buy off the shelf.
Some meat items have been hard to stock, but customers are adapting to what is available. During the ownership transition, the store was closed for a month-long cleaning and renovation, a month that meant shopping for groceries in other towns. The return of the local store was not lost on residents.
In retrospect, I think that was a good thing because people really did understand what it meant to lose the store and not have it here. So I think there is a whole new appreciation for having that right here to be able to go there and find all of the things that they need and to have those store shelves stocked full of the supplies that we need.
The Market on Market is now an LLC, and the board members are looking to make a profit. The next step will be to expand the store size and return the deli to operation. But the emphasis today is on customer service and the revitalization of the 3,000 square feet of grocery space.
I've always believed in the grand opening look in a store every day. Just the way I was trained in past, so when the customer comes in, they can say, wow. The end result, we want them to be able to say, this is my store, and that's our ultimate goal.
In a business known for tight margins, volume is the key to profits, regardless of size.
We are more in belief of fast nickels, better slow dime.
And nickel by nickel, Gowrie is keeping its grocery options open. For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Sales to China and predictions of bad weather in the U.S. move the commodity markets slightly higher. For the week, July wheat gained 6 cents and the nearby corn contract improved a penny. Pressure by the Trump administration on China to live up to the Phase 1 deal and threats of freezing weather helped move the July soybean contract higher by a cent. July soybean meal weakened $1.70 per ton. July cotton increased 43 cents per hundredweight. In the dairy parlor, June Class 3 milk futures rallied $1.53. Another volatile week in the livestock sector. June cattle jumped $7.40. August feeders put on $9.30, and the June lean hog contract declined $1. In the currency markets, the U.S. dollar index declined 133 ticks, actually make that 71 ticks. June crude skyrocketed higher by 27% or $5.14 per barrel. COMEX gold gained $1.60 per ounce. And the Goldman Sachs commodity index added 19 points to finish at 269.90. Joining us now to give us some insight is one of our regular market analysts, Ted Seifried. Ted, welcome back.
Hey, Paul, thanks for having me.
Good to see you, even though it is afar. I know you'd like to be here, and I know you'd like to start moving around. We'll talk about what life is like in Chicago in Market Plus, but I want to start today in the wheat market. Weather was the story a week ago. Weather might be a story this week, corn and soybeans for what's been planted, but what's keeping the lid on any rallies here? Is it the strong dollar, or is it that nobody wants to buy U.S. wheat right now?
Sort of all of the above, but also look at the relative strength that we've seen in the wheat prices compared to the row crops. Do we really need to see wheat that much higher from where we are right now? The weather story really at this point might almost be more on the spring wheat because, yes, we're really far behind planting. And with the cold temperatures and the rain, everything we've got going on up in the Dakotas, we're going to struggle to see that winter or that spring wheat crop advance. We could also see some damage on the winter wheat crop as well. So I think Monday is going to be an interesting day for wheat. Yes, we've got weather for all different kinds of things going on. And personally, look, I think wheat's at a very value area right now. And if we look at Kansas City wheat trading in a very tight range over the past week and a half, I think that's because we've kind of found an area where everything really kind of makes sense here. We've seen a bit of a correction in the spread between Kansas City and Chicago. But in my mind, Minneapolis is the one that has the game across the board.
Okay, real quick, are you making any sales or are you holding right now on wheat? Any contract?
Mark, we're looking at Chicago. I think we can bounce back up towards the higher end of the range before I get too aggressive on making sales. Kansas City, I like selling here or slightly higher around the 487 level or so. Minneapolis, I'm looking for higher prices.
Okay.
I'd like to see a 15 to 20 cent bounce there.
All right, we talked about weather just a little bit. We've got a whole bunch of corn in the ground. It's moving at a ridiculously fast pace. Perfect conditions for some, but yet east of you, they're still trying to get something in the ground. There's a mix going on right there. What's the major player in this market? Because you also have oil that rallied a bunch.
Yeah, as far as planting is concerned, we are off to a really fast pace of planting. However, it is more centered on the west side of the corn belt than the east side, which might actually be a good thing for this weekend where we're looking for some very cold temperatures on the eastern half of the corn belt. So it actually kind of works out. That being said, when we talk about fast pace of planting, we have to talk about acreage. Generally speaking, when we see this fast pace of planting, we usually get very close to the USDA's planting intentions number, 97 million acres of corn. That's a lot of corn. Honestly, I don't think we're going to get 180.5 combined acres in the row crops. I just don't think this is the right climate to see that, especially with, I think, the amount of PP acres that are going to happen in the Dakotas and up north. But you have to imagine that we're going to see a lot of corn acres, maybe more than we need. So that is a bit of a problem there. As far as the biggest feature for the corn market, wow, there's a lot of things going on. We've got China buying, we've got coronavirus, we've got just ethanol issues. Across the board, there's a lot of different things. But I think right now, we factored in a lot of the negative news. Generally speaking, when we get between 40 and 60% planted in corn, seasonally, we start to see a bit of a bounce. You look at the board, the spreads are looking good. The chart looks like a classic cup and saucer formation, which is a bullish feature for a chart. I think we're due for a bit of a bounce. But with the USDA report coming up on Tuesday, it could be a big bearish number. So
Hold
we're a
that
little bit worried
thought.
about that.
Hold that for just a moment because I want to ask Mark in Nebraska's question that he submitted to via Twitter, which is @market2market is how you can find it. Mark's asking, how likely is that USDA will report even more corn acres when planting is done?
Yeah, see, great question, Mark. You're not the only one thinking that. I don't think we're going to see that. As I said, 180.5 combined row crop acres would be a record number. I don't think this is the climate for us to be planting record acres for row crops. I don't think wheat acres are going to decline anymore because, relatively speaking, the prices are really good. I think that, though, at one point I thought maybe our corn acres would be as low as like 93, 94. But with the fast pace of planting that we've got going on right now, I'm thinking more like 95, 96. More than 97, I just don't see that. Yes, we're planting corn very fast, but I don't see over 97 million acres.
So what would that be? So say it does go above 97 million. Is that a bullish signal then, or is it a bearish signal?
Oh, it'd be really bearish.
I would think it would be bearish. Yeah.
97 million acres of corn. Look, you look at the trade estimates for our carryover for the USDA report that we see on Tuesday is the first look that we get at the USDA's WASDE balance sheet of next year's production and carryover, everything like that. So the new crop balance sheet for the first time we will see on Tuesday.
Okay.
The average trade guess is for about a 3.4 billion bushel carryover for corn. That's at 97 million acres. If you see that go higher than that, we're going to have to start adding more to that ending stock number. And it just becomes really burdensome at that point. So we really don't want more than 97 million acres of corn unless we have a major weather catastrophe this year.
All right, let's talk about what it impacts on the soybean market. There's the thought that you talked about China buying some U.S. corn. Is that pulling soybeans along, or what's playing here?
You know, this week we saw towards the end of the week, Thursday night into Friday, we saw some better indications that the trade deal might be getting back on track. We had our trade delegation talking to their trade delegation late Thursday night. Apparently, those talks went well. We don't really know for sure. We didn't hear the details that much. But it sounds like China wants to fulfill that phase one trade deal. And that means they really got to get going very soon. So, yes, the soybean market really wants to embrace that, wants to believe that. But, you know, again, we've got a lot of doubters out there. We've had a lot of doubters since that has been signed, and for good reason. So we need to see the sales start to happen. But if they do, yes, it could be really very bullish soybeans. We don't have that big of a carryover going into the end of this marketing year. But if you look to next year, even if we do get the 83.5 million acres planted, which I'm not so sure we will because of the fast pace of corn planting, we could have a fairly tight balance sheet for next year. And if China starts buying aggressively, we could really have a story in soybeans.
And then we have to start looking at crush, although there was a report this week about that. We're going to have to move on. I've got to get to these livestock markets, Ted, because cattle, I mean, you've got processing that started back up. You saw here earlier in this broadcast, you have a jump for cattle of $7. That's 8.5%. Does this thing have more upside to go?
Yeah, in the longer term, yes. In the short term, I'm not so sure. Yeah, we are getting these facilities back online sort of slowly. And a lot of this is coming from comments that have been made by Sonny Perdue and Trump, echoing the same comments that we're going to be up and running in the next 7 to 10 days. I don't know about that. I think we will be up and running more so than what we are right now. But with the distancing that we're going to have to do, there's going to be a lot of changes that have to be made to these facilities. That's going to take some time. The profit margins that are being offered to packers right now eventually will get us to and maybe even above last year's production numbers, but it might take some time. Now, that being said, cash is getting stronger, like you said. I think the board will start to lead the way. I wouldn't be surprised to see a bit of a pullback, after the 3 limit up days that we saw Wednesday, Thursday, Friday. Friday's close was disappointing, to say the least. Could start off the week under a little bit of pressure. But over time, I look at December cattle, I could see us trading 120. And it's a long way up from where we're at right now.
Well, and the feeder issue gets to be a discussion of if you're holding them in the lot, if August, it's kind of, are you buying cash right now? Or are you buying the futures when it comes to feeders? That's a tough decision.
Yeah. No, we're trading in discounts cash. I like the futures better. I think the futures have more potentials because, again, we don't trade today's, we trade futures. And where do we see the potential for things to be good again? It's in the future. When we get further on into the end of the summer, into fall, it's not the immediate term. We know that demand is really good right now, but we can't satisfy that demand because we don't have the processing capabilities at the moment. I like the futures.
You do. All right. Well, we had a little bit of movement in some lots in Texas and Kansas, some activity in the auctions there. Are you hearing the same thing?
Oh, yeah. It's been all over the place this week. And, a lot of producers are crying foul because of the Packers margins that we have and the huge, huge volatility that we're seeing in the cash market. But look, this is a function of the times that we're having right now. It is, you can see mainstream media reporting on this every day. That doesn't happen. We don't talk about needs on a lot of these, new business news television things. But this is what is being talked about all day, every day. And it really depends on where you're at. It really depends on what plants are up and running on that specific day. And the volatility is really off the charts. So, yeah, cash cattle is a very difficult thing to get a good indication on because it's a day-to-day thing. Again, we trade futures, not today's. I think the market itself, the board itself, is going to give us a better indication of what the optimism is and what we think is going to happen. And where price direction is going to go.
All right, last few seconds. The hog market, they could be the lowest processing speed in a decade. This had rallied going into the last couple of days, and now we've tabled off. Where are we going, up or down?
Well, we had gotten overbought, and I think we needed to pull back. And I'm focusing on December hogs. And we pulled back right to where support was there on Friday. I think we find that support, and I think we bounce back. Over time, I think hogs are going higher.
Okay. All right, Ted, we'll ask you about cotton. We have a lot of questions, and I think you've got some props there that we're going to see. So if that's not a tease to get you to watch Market Plus, I don't know what is. All right.
Yeah. Lots of props, buddy.
All right.
Always.
Ted Seifried, thank you so much. That does wrap up the broadcast portion of Market to Market, but there is still so much more to talk about. We'll cover that in Market Plus, where we'll answer your questions. You can find that segment on our website at markettomarket.org. Facebook allows you to keep track of your favorites from rural America. You'll find behind-the-scenes pictures and a few stories on our feed. We still have that great story of racing tractors, the Audubon 250. You got to check that out. Find us at Market to Market Show. Join us again next week when we'll explore the effects of the finding labor during this COVID-19 pandemic. Thank you so very much for watching. I'm Paul Yeager. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.